Alright guys, in this section of the video I want to quickly show you one of my favorite strategies which I use, and it's called the Fed ABC strategy. Okay, and essentially you do this on FOMC day, and FOMC day is the day, of course, when the Federal Reserve makes an announcement on monetary policy. And full details, by the way, are on my website on leadingtrader.com/FOMC. But let me essentially show you how you'd have done this trade on Wednesday last week, on the 19th of June. So let's just go through that very quickly. Notice, of course, that you do not trade this strategy until the announcement is made. So notice that all this period here, notice the market did not do anything. Market was going just sideways, sideways, sideways. All right, and you only want to really start looking to trade the strategy when the announcement is made, which on Wednesday was at 7 o'clock GMT UK time, or 2 p.m. Eastern time. Now what I have here on my chart, let me just show you, this is a 3-minute chart of the S&P. So I'm using a 3-minute chart of the S&P. You can also do this on the Dow, by the way, so it doesn't matter if you want to do the Dow or the S&P. It doesn't really matter. Either way is fine. And by the way, two other things you want to have on your chart is a 200 period moving average, which is that green line you see there, and the blue line, which is a 21 period moving average. So 200 MA, simple, and 21 MA, exponential. Okay, now this is how you trade the announcement. Once the announcement is made, which as you can see was at 7 p.m. GMT UK time, you wait for a major big move in the market. Now you don't know which direction necessarily it's going to be, but you just wait to see which direction that's going to be. In this case, on Wednesday, the first big move was to the downside. As you can see, that was that move you see there. All right, that's wave A. All right, also known as the true move. Okay, then what you do is you wait for the retracement. Okay, the retracement is always in the opposite direction to the first wave. All right, and that's called the wave B, which is also known as the fake move. All right, now notice you don't place any trades at this point. What you want to do is wait for that retracement, wait for wave B to come along, and then you enter at the 21 period moving average and then at the 200 period moving average. Okay, so you essentially scale in bit by bit, one at the 21, the next at the 200. Okay, and what you want to do is a 3-point stop. So a 3-point stop on the S&P or a 30-point stop on the Dow. All right, and essentially what you do, you trade in the direction of the first move of wave A. So in this situation, you'd be shorting the market, and all you do then is just wait for wave C to come along, which is in the same direction as wave A. Now, what you want to do in this situation, of course, is stay in this trade. All right, and as soon as the market takes out the recent lows made by wave A, which was made at this point, then you bring your stop to break even. So bring your stop to your entry point to protect against risk, and then you trail your stop until it gets stopped out. Now you can trail your stop on a 21 period moving average. You can see right here, in which case you'll be stopped out there. Or notice by this point here, as you can see, the market made a phenomenal move here. You actually would have made a 15-point gain at this point because your entry point was there. So this is your, by this point here, you made at least 15 points. So you could actually take off some profit here once you made at least 15 points. I mean, it's a pretty decent gain here. But even if you got out here, even if you stopped out at this point by trailing stop loss at 10 points, it's still pretty good. So 10 points multiplied by $50 per contract. All right, you're talking about $500 per contract from my subscribers. So here's one from Thomas, who wrote to me saying, "Hey Alessio, thanks for teaching us how to trade the announcement. First time for me, and it worked like a charm. You really got to be fast enough. Thanks, Tom." So yes, he's absolutely right. You do need to be focused and prepared. And here's one from Drew, which he wrote to me saying, "Thank you, Alessio. Today was the first day I traded the Federal Open Market Committee, the ABC strategy." And he says, "I was unsure of myself and made some initial mistakes that cost me some profits, but absolutely learned from these mistakes. Well done to you." And he says he was trading with mini futures on the S&P and the ETF. And he says in less than 2 hours of work, he made $112 in the ETF, but $708 on the futures contract. And so a total of $821. So well done to you, Andrew and Tom, for having done this strategy. Certainly it wasn't easy, but if you braved it, if you braved the uncertainty and you made money, even if you didn't make any money, but you still tried it and learned something from it, well done to you. All right, guys, all I got. Until the next update, bye for now.